Today is Monday, August 29th, and this is the ADM Investor Services weekly market kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Steve Freed, ADM Vice President of Grain Research, and Alan Bush, ADMIS Senior Financial Economist. Starting with the financials this morning, Alan, what are the most important economic reports this week, and how do we see them impacting the market?
Okay, well, first of all, we'll have on Friday the employment situation. And right now, the non-farm payrolls are expected to be up 293,000. The employment rate guessed at 3.5%. But I think a lot of people are spending more time looking at the labor participation rate. And they're looking at that to see if there are any clues to if people are having more than one job. In fact, the last report, which showed a very large increase, it did show that there were multiple job holders. So that's becoming more important to look at as far as labor participation and how many people have multiple jobs.
And in regard to seasonal trends for stock indexes, what typically is the trend for stock futures in September?
Well, you would think with what's happened over the last couple of days that August would be the weakest, but it is not. September is the weakest month of the year, and that would be for the S&P 500 and the Dow. The S&P averaged a loss of 1% going back to 1928, and the Dow was down approximately 1% going back to 1896. I'm inclined to think that September will not be a down month. I think we've seen a lot of the pre-positioning pressure already in August. So I would be trading counter to the seasonal. I think September will be an up month. Maybe not by a lot, but somewhat higher.
Thanks, Alan. And lastly, Alan, what's your current take on the industrial commodities right now?
So I think they are all going to head lower as the U.S. economy and the global economy weakens, with one exception, that would be natural gas, which has quite a few political overtones. So I would not include that in this group. But the crude oil, gasoline, lumber, copper, I think all of them are going to work lower as the economy continues to weaken.
Thank you, Alan. Steve, looking at the grain markets, November soybeans appear to be making a high near 1480 after a steady uptrend since the July 22nd low. Why? And do you feel prices are in for a lower trend?
I do, because I think two things. Number one, China, with their COVID lockdown, new COVID lockdowns, and their economy slowing, may not take as much soybeans as the market had anticipated. Number two, with the rains over the weekend and the pro-farmer yield, it looks like the U.S. is going to have a record soybean crop. And Brazil will start planting beans in a couple of weeks, and their CONAB came out with an estimate of the 2023 soybean crop also at record high. So I think a lot of people believe that we're in kind of a $13.50, $15 range. We'll break the trend line that we established from the low in July 22nd and trade closer down to a $13 low in the harvest time.
Steve, what about the corn market? December futures continue to see some strength, have been in an uptrend since July 22nd as well. Will this continue into harvest, and should the farmers be selling into this rally?
Well, I think the pro-farmer came out with a 168 yield, and everybody's been trading 174. That kind of shocked the system and brought in a little bit new buying. We also have very strong cash basis levels as we get tight supplies. Offsetting that is Ukraine is going to try to export more corn out the corridor. The big question is the corridor deal expires in October, and will it be continued? So I think we're at close to a high at the 200-day moving average at this price level. And I think some people feel we'll go back and test support around the 625 area and maybe trade below that as far as a harvest low is concerned.
Finally, Steve, if we look at the wheat market, the December futures are in a range, say, between 750 and 850. What do you think will happen with the wheat in the near term and as we head into the end of the year?
The big bearish news in the wheat market is that Russia has a record wheat crop, and they're going to try to ship as much of that grab as much of the world tenders as possible. The only issue is that they continue the war in Ukraine, and they continue to see that there might be more sanctions against them, because the current sanctions is not hurting their economy. And I think that we've seen a lot of movement in the dollar higher, and I think that has offered some weakness in the wheat market. So I think it still stays in this trading range. We have really low volume, had steep drop in open interest in the last week or so. So there really isn't any volume. So expect some choppy, wild swings in the wheat market if any news pops out contrary to what we're thinking.
Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.